The Dow just had its biggest point drop in history.
More than 5 million more unemployment claims last week.
Oil prices crashed.
Because of the coronavirus pandemic, more than 20 million Americans have lost their jobs. But the stock market remains open for business, and in the last 8 weeks, we've seen some of the most dramatic swings in history, impacting people's long-term and short-term investments. And some investors are betting on stocks that are benefiting from the crisis. So what should you do with your money during the crisis? From stocks to 401ks to how to use your stimulus check.
I firmly believe that if not 10 years from now, 20 years from now, this is a blip on an upward trending chart.
If you have liquidity, I think you should think about investing.
I talked to two world-renowned financial experts, CEO of the investing platform Ellevest Sallie Krawcheck, and the man known as the Dean of Valuation, Aswath Damodaran. I asked their advice about what to do with your money during the crisis. But first, let's talk about what you probably shouldn't do.
What? What did I just do? I lost 100 grand in the last second, down $500,000.
That's Barstool Sports founder Dave Portnoy, a multimillionaire known for gambling on sports. Portnoy decided to switch to day trading in the stock market when the pandemic shut down his other hobby.
So I put $3 million to start into my E-Trade account. And that was like my day trade money that I was going to play around with. I've never really day traded before. I think I bought one stock in my life.
When I interviewed Portnoy on April 16th, he said he'd lost about $720,000.
And what would be your advice to an aspiring day trader?
Yeah, my advice would be never day trade with money that you can't afford to lose.
So for most people, jumping into day trading probably isn't the best idea. But if you're lucky enough to have a paycheck during this crisis and some extra cash to invest in equities, what should you do? Let's start with Professor Damodaran.
Don't get over ambitious and try to put it all in one stock.
Damodaran suggests spreading your bets across 4 buckets.
The first is what I call my bargain basement bucket. These are companies that you know will be around after this crisis is done. You're going to be able to get them at a price you could not have got them 3 months ago. Travel companies, Expedia, Booking, maybe even a couple of the oil companies, Conoco and ExxonMobil. The second is a much riskier strategy. You're buying stocks that are distressed, potentially could go under. But if they turn around, these could be the companies that pay off tenfold, 20-fold. Here you'd include some of the more troubled airlines, Delta, American, United. There is a chance they will not make it. If they pay off, you get a big upside. The third is what I call safe at a reasonable price. These are companies that are safe companies because they sell products that people continue to use. The Apples, the Amazons, the Googles. Unfortunately, everybody is loading up on these stocks. So you might want to go below the top echelon and look at companies like Adobe. Hey, let's face it, Adobe is going nowhere. We're going to be using Adobe software 2 years from now. And the last group of companies, it's a tricky one because there are going to be certain changes in behavior that come out of this crisis. So you're looking for companies that you think can benefit from this. Zoom, Instacart, etc. When you talk about online education, take a company like Chegg. There are companies that actually come out stronger because of a crisis.
So while Professor Damodaran has a multi-tiered strategy for investing in equities, Sallie Krawcheck has a more streamlined approach.
I would not make sector or company bets. The correct answer is invest in a diversified investment portfolio. Take that extra cash you are privileged enough to have. If you are younger, you're going to want to put it in more equities. If you are a little more mature, you're going to want to have less equities, more bonds. And I know it's not the advice anybody thinks that they should be receiving because there's this desire to do something. Just keep it boring. Find your excitement elsewhere, please.
So what about long-term investments like 401ks? Against my better judgment, I checked my balance and saw that the last 9 months of gains had been wiped out in the last 6 weeks.
Frankly, given what we've gone through, the fact you've only lost 9 months of returns, thank the heavenly stars, because it was and could be worse. But typically, the advice is do not touch that money in your 401k. Happily, you can borrow from your 401k without penalties right now. So that was part of the stimulus bill. Typically, don't touch it, but if you need it, God bless.
What type of guidance would you have for people who don't have extra money, who are being negatively impacted by this crisis, who are receiving the stimulus checks, in terms of ways to optimize their own finances during this difficult time?
Go hard at expenses. One place to look very quickly is, your credit card debt that's outstanding. If you could take that stimulus check and pay that off, that's going to have a positive ripple effect of helping you. If you have a mortgage, does it make sense to refinance? For a lot of people, the answer is yes right now. Worst thing that happens, they say no.
This is not the time to be playing games. Because if you survive, you will have time to build your nest egg back. It is a time where you got to get your priorities straight.